be able to send it out to y'all, no problem. And then there's a way to share, okay.
So Jeff is here, right? Jeff, Kaman,
Yes.
and Asad.
Is it sharing?
Okay. Rahman is joining right now.
I'm sorry, I'm like figuring this out as well. Okay. Do y'all see me or you see Cameron on the screen?
Is there
I can see you
here?
guys.
Okay, perfect. Okay, so you guys can see everybody on the screen, correct?
Yes.
Yeah.
Is it Dr. Azad sitting here?
Right here.
Dr. Azad.
Yep.
Dr.
My
Azad,
father-
I used to be a tenant long time back on Lueta and Spring Cypress on the AGP Center.
He was a tenant of yours on that center in Spring Cypress many, many, many years ago.
Oh, okay.
What kind of business did you have back then, Zul?
That's I had somebody wants to get into the dollar store. I was an indirect partner there. It was a dollar store right in the corner.
Very cool. It's a small world.
Yes.
Okay, so let me know when you think you've got a quorum here. I see 6 people total. There's Zul, Jeff, Assad, and Rahman. And if I didn't pronounce any of your names correctly, please correct me.
I think we're good to go. We can
Okay,
start.
awesome, thank you. Okay, so I'm going to share so let me introduce who all is here. My name is Dr. Ishnella Azad. I go by Ishnella or Ish. You will have my email. I'll send you a recording of all of this, so no worries if you missed part of it. Behind me is my business partner, Matt Wells. Oh, sorry, across from me, Matt Wells. He is the one who's going to be going into this project with us, the data center portion. Behind me directly is Todd Smith. He is CTO of Transwestern Real Estate. He also has been in the data center field upwards of 15 years?
16 years.
16 years. Has worked with a large number of companies. And I'll have them introduce themselves and go through it. Then behind Matt is my father, Dr. Hardam Azad. Then behind him is Rochelle Urenda. She's the head of our acquisitions team. Behind her is Devitt Higa. He is an acquisitions analyst. And then behind Todd is our COO, Mr. Christopher Dykstra. So for 5 Rivers. And so you've got like basically the whole team that would not only be part of the data center realm, but as part of our concurrent retail shopping center that we do both together at the same time. So now I'll go through both of them to give you a sense of who we are and all of that. So let me share the screen and then we'll start. Okay. Can everybody see the picture on the screen?
Yep. Yeah.
Awesome. Okay. Okay, so this is us. We are 5 Rivers CRE. And okay. So we're a boutique family investment and asset management firm. We build generational wealth, basically. We have over 400, I think we're about 438 strong, of family of investors. When I say family, we've been investing together, growing one by one, basically through happy customers word of mouth. We started our website about 1.5 years ago. We had grown from nothing to 400 plus strong by happy customers word of mouth. We believe that we are stronger together than individually. Everybody puts in a little bit of money, puts in a little bit of strength, puts in their contacts, and we all do well together. So you met some of us. I myself is Dr. Ishnella Azad. You met Rochelle Urenda. Eddie Flores was here, but he'll probably be back. Devitt we're going to talk about Fayette Pavilion. Then we'll talk about the data center. That should have been Conroe. And then, oh, it went to the next slide. And then we're going to talk and introduce you to some of the teammates. So why do we do this? And what's the point? Obviously for financial freedom. We want to make a great return with doing the least amount that we have to for it. So why does one invest, and what should you invest in? We believe commercial real estate, income producing real estate, typically does the best. It has the highest return at the lowest amount of taxes one needs to pay. So it's a great investment. These are basically a 20-year annualized returns by asset class. You can look at REITs. They typically do the best at about 11.2%. But recently, in the last 6 to 8 months, they've gone down to about 5%. They have not done well. Then you've got different S&P markets. You've got small cap, you've got high yield, you've got a lot of different options for where you can put your money. Almost all of these are taxable, different tax rates, but taxable. Then you get down to the individual investor. We have a lot of people who do multifamily. They do their own small shopping centers. They'll do a single house individual, residential homes, office, multi-use. But it's a lot of work on your own with your own hands, and it takes you away from where you're really making money. And on the over 20-year track record, what the individual investor has done personally has been a 3.6 return. A lot of hard work for not an amazing return. So who are we and what have we done? So this is every single property we have owned and have sold over our entire portfolio. We currently have 23 now. We've bought and sold 10 shopping centers. From the first one we bought in 1996 to the one that we just sold a month ago, Desert Plaza in Louisiana. On average, this is basically a detail of how much we bought them, how long we held them, how much cash was distributed, how much the loan was reduced, and how much weighted average it was per total hold period. And this will be in the thing that I send you, and I'll also send it as a separate attachment. So what that means is that of a total of 10 dispositions, we've had a total return of 386% during the average hold period of 12 years. That's a weighted average of 31% return per year on our entire portfolio of 10 centers. We have a pretty good, strong track record, and they've often said the best predictor of how you're going to do now and in the future is what your track record has been over 27 years. Okay, so this is kind of what we're going into now. We used to do lower, more urban centers. Now we do Class A lifestyle centers in order to have lower risk, greater risk mitigation, and to build generational wealth, not just a quick cash play. We are now diversifying and having a quick cash play, random. We don't know when we're going to get them because we tend to find distressed properties where there is a quick upside. But overall, we have people who started when they were in their 50s. Now they're in their 80s. Their children are in their 50s. Their grandchildren are in their 20s and 30s investing with us. We have people for their generations, and we need to see them pass that generational wealth from person to generation. We want that financial freedom. So the first thing we're going to talk about is our combination of 5 Rivers CRE, and I'm going to check just a second, make sure that nobody needs to be admitted. Did you guys see? Okay. Did anybody come up needing to be admitted? Okay. Okay, so right now we're going to be talking about the data biz. We closed on one in mid-November in Claremont, North Carolina, and that did quite well. Found it, sourced it, brought due diligence in. That's how I met Todd Smith. We evaluated the physical due diligence, the business due diligence. He introduced me to Matt Wells, who's an expert in the field. He builds them and does that, and I'll have them talk to you a little bit now about who they are. So Matt Wells, Wells Holding, why don't you tell them a little bit about yourself? I'm going to pause this while you do that. Okay. So I think you're on.
Yeah, so Matt Wells, I've been in the business my entire career. So my entire career is about 20 years now. I, like Todd, have been in and out of the data center business since about 2007, 2008. We've constructed in the data centers alone, we've constructed a little bit north of 20 megawatts of different facilities for Fortune 50 companies. Back in the late 2000s, I was kind of considered the trading floor guy here in Houston. We did trading floors and data centers for clients such as JP Morgan, Shell Oil, Fidelity Investments, and several other banks and other oil companies here in Houston. I founded my company in 2010. We've been doing primarily industrial development, land development. So to date, my team has developed close to 10 million square feet and a little over 1,000 acres of land. At present, we're developing a 200 megawatt facility, College Station, with a certain university in College Station, it's a major research institution. It'll be 200 megawatts, 300,000 square feet, and then we've acquired. My client we're doing that as a fee, but across the street, we've acquired 160 acres of additional land for further data center development. So that's a triple P, public-private partnership with a major research institution in the United States. So we've happened through Todd, we've met Dr. Schnella, and we've closed on the deal in Claremont. We feel very strongly that we're, in late stages negotiations with a tenant that's over there. We've done copious amounts of due diligence on the product that Dr. Schnell was about to talk about in the Conroe market, and then above and beyond that, we've closed on other assets, in other states and also in Canada. So we specialize in broken toys. I like broken toys. These are assets that are high quality, but have for whatever reason, are either underperforming or they need improvements, or there was a distressed owner or something like that. So we are able to take those assets, bring them under control, turn them around, and then produce a solid product. So we've done that multiple times through multiple different types of product type. So with that, I'll give it back to Ishnella, and she can talk through these assets.
Okay, so are you guys, first and foremost, are you guys able to see us on the big screen so you guys can focus on what we're saying and you can see our faces?
Yes, we can see everyone.
Okay, perfect. Okay, so now I'd like to introduce Todd Smith, and Todd, if you would tell them a little bit about yourself.
Sure. All right. Good afternoon, and to everybody. So I've been in the data center business since 2007. Started with CyrusOne, who is a Houston-based company and now one of the larger providers in the world of data center services. Was there in different roles that were primarily revenue producing. Built the first channel for CyrusOne with companies, managed service providers and things like that, as CyrusOne was exiting those service lines. Created that was very successful. The company itself became very successful 2007, 8, 9, 10 in getting the energy companies in particular out of building and operating their own data centers. That took hold very well. We expanded into multiple different markets. Did a couple transactions where we sold to a public company, took over all their assets that we had invest. I took on a role at that point to really help build the departments for the company that were badly needed for all customer-facing activities, customer service, account management, contract renewals. That gave me a pretty terrific education in the inner workings of data centers, how deals are done, how things are managed, all of the issues that can occur in the data center from an operations and client management standpoint, and in particular, how contracts are structured, renewed, what churn looks like, why churn occurs, things of that nature. I got a very good education on. We took the company public in 2013, I'm fairly entrepreneurial mindset, so that probably wasn't where I wanted to stay. Fun was leaving the room, so I left, and I've done provider independent work since. I've not left the space since 2013. I've done provider independent work, doing a range of activities, helping mid to large enterprises make decisions within the data center and cloud market, and increasingly helping investors buy and commercialize assets, help them lease those up, working everything from strategy, dealing with clients, and been doing this in earnest for quite a while. I will say, as highlights, that these markets change pretty significantly over time. And what I am seeing at this point within the last 12, 18 months, and I think there's a good horizon for it, is a real shift where pricing is starting to go up for the first time in many, many years. Supplies are getting constrained, and there's a real rush for a lot of space and power in different segments of the market. It would take a little while to go through all that, so I won't. But that's me at a high level, and I love the space. I think it's been the future. It will continue to be the future, and very exciting segment of the real estate world.
Yeah, so we're gonna start sharing again. Let me admit this person. We're gonna start sharing again, and let me get back to it. We'll show you a little bit about.
Okay, let me add one thing.
Sure.
The particular asset we're about to work with, I'm very familiar with, as is Matt. I've got a history with it, both competing against it in the Houston market, and I did do consulting for the property.
Yeah, y'all know, they know this
So
particular data center incredibly well from the inside out. So as we go through it, you'll recognize their voices now. As we go through it, they'll talk to you about what their thoughts and experiences are, what the pros and cons are, and a variety of other things. Okay, that's not what I really wanted.
We can see it now.
Oh, you can see it? Okay. Okay. Let me go back to there. Weird, that is not what I had seen earlier. Okay, have you guys know what I should do here?
I think you.
So explain this, I guess.
Okay, just click on it. Okay.
There.
Okay,
There we go.
sorry. Okay, so as they mentioned, these are two data centers that are sister data centers, and they're in a suburb of Houston called Conroe, Texas. So maybe an exurb rather. It's along the 105, and this is a very valuable area. It's right across from Lake Conroe, and that area has been booming. I think the land value itself has probably doubled in the last 5 years. So it's a very well located area to have that data center. And the reason I say that is that the total campus of that data center, our goal is we're going to purchase them separately, but to put that center back together. It's a total of about 50 acres. This one is the smaller piece. The larger piece we're going to try to do has about 33 acres attached to it. So this is a look at where it is. You can see the red dot. It is in right next to the lake. The satellite view below it is the terrain view. There is a brand new Kroger market at the corner that you guys can see. Kitty corner to that Kroger, closest to where the red dot, which is where the data centers are located, is a brand new HEB that's going to be built and developed there. I was just with the developer of that HEB yesterday afternoon. And so they are very excited about getting that project underway. Not only is he going to be building that corner, he already has plans to put in multifamily and additional retail on that land and the land next to it as well. So just for the land alone, that area is about to be developed and it improves significantly. Okay, so this is the closer view of the buildings that are on 550, 552, and 554 Club Drive. The city is called Montgomery, Texas, but as it's in Conroe and across from Lake Conroe.
Sorry, we can't. I'm still stuck on the first page of the PowerPoint for some reason.
Okay. Let me see.
But we are familiar with the Conroe area. We have a property right on 105 and Old River.
Okay,
Yeah, Chanel, I can, yeah, now I see it. Yeah, I see it. now.
okay, so can you see
I'm
this?
still not able to see it.
Okay, who's able to see 5 River CRE/core database on top? Anybody?
Yeah, I can see that. And then I think there's arrows to go right and left, but as you scroll, is it something that we're gonna be able to follow?
Yes, hold on just a second, because it was working before, y'all were seeing it, and then it did this crazy thing. Do you like to resume from slides? Okay.
It gives you provision to provide to sync with the presenter, right?
Yes, okay. Yo, this is not the same as I was working on before.
Yeah,
Okay.
so it's-
What do you see on the screen now?
No.
Now I can see it. The
Okay,
Five
perfect.
Rivers, the database. Yep.
We're just gonna go through here then. Okay.
Yeah, but Ramon, the thing is that 10 of 44, right? So I think it's lagging maybe.
So now do you see 11 of 44?
We still see 5 Rivers CRE LLC. Building generational wealth with multi monthly cash flow depreciable income.
Stop sharing. Stop presenting. Okay. So I'm gonna start the share over. Let me admit this person. Okay. No, it keeps doing this.
You gotta share your screen. So go back to share
Okay.
and then press your screen. That one right there. And then now you can open the PowerPoint.
Okay. Data center in Fayette, data center. This one right here.
Yeah, that one might be it.
Okay. Hold on. I apologize, you guys. Where do you have you had it open before?
If you can go to your email.
You can. Oh. Okay, wait. We had this up. Why is it not working now?
Now pull up the email.
Okay.
And
Yeah.
open. Now open. And now go back to the center where the teams. On the right,
Share this one, did?
and then go up to share. Screen. On the left. Now click on that and start the presentation. Bottom right of the presentation.
And click on this.
The laptop is kind of covering it.
Yeah. Okay, hold on, you guys.
Now they should see.
Okay. It's not.
There you go. Everybody sees that?
Do y'all see
Yeah.
where it says track record of entire portfolio of sales?
Yes.
Yeah.
Okay, perfect.
They were in the mind.
Yeah. Okay. Apologies for all of that. I'm more than middle-aged and not so tech savvy. Okay.
No worries.
Okay, so now do y'all see 5 River CRE/core database with Wells Holdings?
Yes.
Okay, so this is a map. Y'all are familiar with Conroe and the 105. This is where it is in relationship to Conroe, a satellite map of it. This is a close-up of the actual site itself. It's 550 through 554 Club Drive. 550 is called the bunker. 552 is the 550 is the 4-story office building. 552 is the underground bunker. It was built originally as a bomb shelter, but it has been turned into quite a while ago the actual bunker data center. 554 is a brand new, basically 2-story shell of a building that is ready to go to be a data center with acreage on its own. So this is basically just a little bit of it. It's at the height. It's the highest of the area, flood-free zone. The center has undergone, it's about to undergo foreclosure. We are trying to buy the note on it before it goes into foreclosure. I've met with 3 of the bankers that are attached. So each of the lead bankers, from their CEO, Keith Jordan from NBH, Veritex was present, and also First United, Scott Stubbe. And so we have talked to them. They're in negotiations with us. We've got the lady, Jimmy Gomez, who owns it right now, as well interested in selling it to us so that we take it over from her before she goes into foreclosure. So these 2 sister data centers are, as I said, located next to each other. This is the prospectus for the first one that we are trying to, we've got in contact with those bankers and they want to sell to us. So it's located in a rapidly developing portion of Montgomery County. It was built in 2015 for a corporate user and never occupied. It is poised to be used by somebody to just move in. We will build it out for them and what they need. It's purpose-built as a data center within a corporate campus. The finish out is fashioned in a modern, edgy feel. It's quite beautiful, actually. The area amenities include recent developments by Kroger and Walmart. And as I said, I spoke to the developer yesterday and his whole team about the HEB that's going in. So it's 107,000 square feet over 2 levels. It's about 7,500 square feet of conference room space. The office is fully built out. 24/7 manned security, fully fenced, heavy power with a transformer available. Did you not put it in the second page?
No.
Okay. Okay, we'll talk to you a little bit about the, and if you could add to it and add to it, we'll go back to it. So let me have Matt and Todd talk to you a little bit about this, about their experience with it, them being inside of it, what they know of it, and then we'll get you the numbers in just a sec.
So the 554 building is detail. It is a shell building. It is purpose-built data center. It was built for ThyssenKrupp was going to be the end user and the tenant. This was going to be a corporate location for them at the time. ThyssenKrupp, for whatever reason, ended up not going through with it, and then the current owner just took the building and has been, in the current state as is. She has the challenge that the owner has is she does not have the equity or the cash to go in and put in the improvements that are necessary to bring it up to a data center or to lease it out as a co-location data center. And so that's one reason why it's just been left in its current form since 2015. The second is that she just doesn't believe in marketing. All of the marketing that has been done and all of the tenants that have been in that space have been on a word of mouth basis or literally walked in the front door. There is zero outbound marketing in this facility, and she'll admit to that.
It does.
So there is a transformer on site. There's one transformer. It's a smaller transformer, but it is a transformer. I think it's a 3750 that's sitting out outside that site. It has all of the requisite fiber that is coming to that campus. There are 13 different carriers coming into that campus with 2 more additional that would be on the way that I could bring. So connectivity, checks the box connectivity, checks the box in terms of the actual build and what it's built for. And then lastly, in terms of power, we've been in negotiations with the power company, direct with the power company, and we have a contract in hand that can get us up to 12 megawatts to the campus. Obviously, that power contract has not been executed because we don't control the property. We're not the owner of the property, in other words. So that's waiting to be had. So once you have 12 megawatts, then you can go and start fitting it out. We are in discussions with several tenants that just want the power alone and don't necessarily need the fit out, which would be a fantastic option for us. We don't have to spend that additional capital. But I've been involved with this project since 2008. We were on the team that went in and retrofitted that bunker from a bomb shelter to a data center. The client at that time was Continental Airlines. And this Continental Airlines housed all of their flight operations out of this facility. What they saw in the facility was, one, it was at the highest point in Montgomery County, so it cannot flood. And then two, it is outside of the hurricane zone, so it's far enough north away from the Gulf Coast that it's not going to be prone to any kind of hurricanes. And in fact, it's actually a disaster recovery area where everybody would flee to in the case of a hurricane event or, God forbid, a terrorist event. So we've done, as I mentioned to you, we've done stuff for Shell Oil. We've done disaster recovery where I built the primary trading floor and data center downtown Houston. And I built an exact replica of that in College Station. And they would literally want, if in the event of a natural disaster or a terrorist attack, they can put all of their traders on a bus, drive them north, wiggle a mouse, and they have exact redundancy in everything that they're doing downtown. That's what there was, what was intended for with Continental Airlines. There was also Repsol was another oil and gas company that's there. Currently, Garmin is inside of that facility, and these are all facilities that are there for a defined reason, because they know that this is where if the world comes to a problem, this is where people are going to come.
911.
Yeah, there's two 911. So the emergency services district for Montgomery County is going to be located outside of this facility. Montgomery County has put in a significant amount of capital improvements into Highway 105 for a very robust fiber line coming from 45 over to this facility. So Montgomery County's 911 facility will be there. And then we also house, or the facility also houses, Harris County Emergency Services District. So Harris County is the county to the south. Harris County is one of the largest counties in Texas by population. And they recognize this value in this site, in that when they have to bug out, this is where they're going to go to, and they can still conduct all emergency services operations. So
It's about as safe as you can get,
this is the place, guys.
which is why they call it the bunker.
Right.
Yeah, I mean, I'll add some historical color. I mean, when going back around the time I got to Cyrus One was the time when Jimmy came in to the bunker from an ownership standpoint, and they were competitive. I mean, they did well, and they did well for the reasons Matt was talking about, which is, Houston as a destination for data centers in general has usually been a local market because, people say it's hurricane zone. So they would look at Dallas or Austin or San Antonio before Houston if they had the choice, if they didn't need to be in Houston. Well, Conroe, as you say, is kind of an expert, right? I mean, it's pretty far north, and any of us that have been through hurricanes know every mile away from a hurricane is a big deal, and it's a lot of miles away from a hurricane. The other part of it has been, sometimes optics and marketing that Jimmy didn't do a lot of, though. That story, that security story really resonated with people. A lot of the names he was saying were also clients with us at Cyrus One and had really gotten a really good service experience at the bunker. My last experience there, however, was back, I gotta say it was 2016. I was hired to consult. There was concern about the loss of the largest client. They knew I had a background with that client and was able to level the playing field, and we successfully retained the client, but knew that the future could have a problem and needed to start taking action. Well, they didn't, apparently, and didn't really do what they needed to do to take advantage of that above ground, which was essentially almost built when I was there. So I think what we're hearing, Matt has been under the hood with this more recently, that this had a good past. It had some great clients. It's still got great infrastructure. The connectivity is fantastic. And there's a lot of leeway in what's apparently quite a seller's market right now. So Tom, be on the asset.
So I think this really comes down to an infrastructure play And inside of that infrastructure, to Todd's point, is everything under the hood is solid. So what we look for in data centers is we're looking for connectivity and redundancy of connectivity. So in that case, we have 13 plus carriers that are coming to that facility. Second, we're looking for power and a redundant source of power. So this power is redundant from two separate substations. So in other words, there's two different legs coming from two geographically diverse areas coming to power this facility. So that checks the box. Lastly, that you're looking at, stability of the asset itself. And being at the top of the hill and the tallest point in the county, that checks that box as well. And in terms of security, there's 7 layers of security to get into any of these strongholds of the facility itself, starting with a fully fenced and manned gate. And then that's checkpoint 1, and then there's 7 other checkpoints to get inside of the box itself. So in terms of security, it checks that box. I think what we have here is just it's a marketing problem. And I think it is just a turnaround problem. So number 1, marketing, and 2, putting a little bit of CapEx in, bringing it up to speed to modern spec, and then getting it out there on the market. And I think we can definitely turn it around. I totally believe we can turn it around.
Yeah, the infrastructure is great. The design is great. I think it just didn't have there were no eyes on it. There was no marketing. I mean, you guys did a phenomenal job. Y'all may not know, but Todd Smith and his partner Hadassah are phenomenal marketers and really have knocked it out of the park for many of the really big companies that y'all have heard, Cyrus One and a variety of other properties. They have just done phenomenally well. So our team puts together, we're the real estate company, we bring in the equity. We have the gentleman who actually fixes these, builds them himself, Matt Wells. We have the marketing arm, phenomenal marketers who will go out and get us the best tenants. So that's why we've created this team to do this together, because we did one last month and we're knocking out 2 this month and the next month, and we're onward from there. We find, as Matt says, broken toys, we find distressed properties, so we can bring the greatest investment return on equity that's possible to y'all. So I'm going to start sharing this again. Devik did add.
You said, open your email.
Okay. No. See.
Same link on
Okay.
the right-hand side, on the right-hand side.
Doing that thing again.
And then open Teams
Sorry.
on the right-hand side.
This one?
Yeah, on the right-hand side.
Okay.
And then share,
Okay.
and then screen. Share. Screen. There you go.
Okay.
And then you see.
Okay. And the page we're gonna be at. What's this? It's just totally gummed up on me.
You just
Click
click
it.
it.
Yeah, use
You
the
can click.
mouse, no problem.
Okay. Okay, so there we are, located there.
It's deceiving that you're that proximity to the lake, but you're actually the highest point. So you're overlooking the lake.
Yeah.
Significantly. And so
Okay.
you'll see right there in that aerial, the red box is the site. The Issues Point, you have a future HEB coming in at the hard corner. And then you've got, this is in the path of growth. And so we're seeing a lot of the future residential coming in. Major home builders, top 10 home builders are coming in around it. And then this site's sitting right in the middle of all of that. And then you see there's that one box that says 911. That's the Montgomery County Emergency Services District. That's where they're going to be putting their 911 facility.
Yep. So right now, the below replacement value purchase price of 6.9 million, negotiated with a very motivated seller, Jimmy. Just spent the last couple, saw her Tuesday. 6-month investment horizon with an estimated exit price of 18.5 million. This gives us an estimated limited partner return of 52%. I'm going to have Matt walk you through our prospectus some of the numbers, and then where we're getting our return on LP equity of about 50+%.
Sure, we're looking at a capital raise, new equity. We're looking at just equity fund the acquisition, about 10.7 million. That would include a purchase price of 6.9. We're looking at closing and purchase pursuit costs of around 348,000. You've got a leasing commission that we'd be paying to the tenant broker of about $1 million. That's a tenant that's looking to come in and just take power alone. And they're actually not even looking to occupy the building. They want to occupy the yard in front. And so they want to put these small little huts. They're like little containers with a transformer next to each one of them. So they would occupy the yard in front, which would then allow us enough capital through the use of those revenues or recapitalization of the loan to take that capital, pour it back into the building to begin the build out. So that'd be, kind of like a phase 2, if you will. We've added a TI reserve of $500,000. That's just in case we need to do any kind of improvements to the power, any other kind of site improvements for that user, fencing, power, anything else like that, stabilization. I just threw some dollars in there for them. And then the syndication fee is $1 million. Working capital, put in $1 million. That just needs to be trimmed once we get further into this process. But you're looking at a total capitalization of 10.7 million. This shows the funds flow statement kind of towards the middle of the screen, and then have the equity return towards the bottom. At the 6-month mark, we're looking to recapitalize it with a really debt provider at that point, 6-month mark, and then we would provide the LP investor a payout of 18.5 million would be the total value. Return to capital of 10.7. It leaves the net proceeds of 7.7, and then we're proposing a 75-25 split of the net proceeds, and you see the returns there. So the project IRR is sitting at 71%, and then the return for the LP investor would be around 50%.
Which is a phenomenal return, we feel. And it's very short. We're looking to cash out, recapitalize, cash out our LP investors to give this high return on LP equity in about 6 months' time. You say that's about accurate? Yeah. So if we can cash out in 3 months, we will, similar returns, but we want probably about 6 months.
It's a matter of getting the tenant in and occupied. And then once he's stabilized, then we can go and recap it.
Yeah. And we've got him in hand. Matt has done a phenomenal job of getting that tenant in hand for that site. What was your last conversation with him?
He's waiting on us. The last conversation was Monday.
Okay.
So we're waiting on 2 things. We're waiting on Ish, and he's waiting on me. So,
Okay,
so
we're ready to rock and roll. And then with that tenant in hand, we can go to a lender, recap, cash y'all out at a phenomenal rate of return, and hopefully way sooner than 6 months. So that's what the data center is that we're talking about. We are comboing it. And I'm going to tell you a little bit about us again. We're comboing it with who we are in a retail shopping center that we're doing. And we're doing a tiny fraction of that retail shopping center. It's a very large, phenomenal center I'm going to tell you guys a little bit about. That's why I've got our real estate retail team here as well. So a little bit about it. It's called Fayette Pavilion. It's in a suburb of Atlanta. It's 11 miles from the Atlanta airport. It is Georgia's largest open air shopping center in the entire state. It is the busiest shopping center in the entire state. With a 1% share of the data center, we are, because I stopped counting at 92 people who wanted in and were ready to throw their money down. And I'm being selective of who gets to come in and how much they get to invest. We're looking for long-term investors who will get to know us, dip a toe in the water with our retail locations. We have 28 years of experience doing that. Average weighted return is 31% per year, our entire track record. So we know what we're doing. We do this one tiny thing in suburbs and exurbs, outdoor retail shopping centers. This is our largest project. It is 1.1 million square feet.
And I'd like you to take a look at it. Let's see. Let's see if this one worked, if we were able to fix it. Okay, so a couple of the deal points I want to make you all aware of. The thing said 8.6% cash on cash return. That's not exactly accurate. We actually have demanded a little bit of a price reduction from the teachers fund that owns this property. We now have, due to that price reduction, it's going to be about a 9.2% cash on cash the first year. That is artificially low. I am stripping out $15 billion in cash at the very beginning of the deal. Why? 1.1 million square feet at $14 per square foot of current TPO, 60 millimeter TPO roofing system. That is going to be a fortune at 1.1 million square feet of roofing, horizontal roofing. I'm moving 9.5, 10 million out immediately for that. There are 26 big box tenants that are part of that center. Each tenant represents about 5 to 8% of the tenant space. If I lose 1 or 2 big box tenants, it's not going to take the center down, but it's expensive. I'm going to park $2.5 million in cash from day one for TI and LC. I'm also going to park $2 million in cash at BNY Mellon in municipal bonds, tax-free. Why? Because I don't think that parking 2% of the asset value is all that much. And in case we get hit by a fire, flood, tornado, whatever, farmer's insurance is going to take me 6 to 8 months to pay me out. I'm not losing a Best Buy or a Michael's or somebody like that because the insurance company didn't pay out in time. So I'm taking all that cash out, moment one, parking it with a lender or muni bonds at BNY Mellon. That has artificially deflated the cash on cash at the beginning. And now with that decrease in price, it would start at 9.2, and it's actually higher than that. And remember, all of this is depreciable monthly income. We have in-house accounting. We generate your Schedule K1s for you. Your box number 2 on the K1 will show usually that is a negative number because it has been depreciated. That depreciable amount will save you a lot in taxes. We do a 1031 exchange at the end of the process. So full proceeds from sale is tax free as long as you flip it into the next income earning property. So this, if you're from Houston, what Fayetteville is like, it's like the Woodlands or Sugar Land. It's got a lot of buying power. It's centrally located from all around Atlanta because it's got the 26 massive big box corporate tenants. Plus, this site is unusual. I've never seen it before. In the middle of the center, Super Walmart, Super Target, and Home Depot all own their own land within the center. They have each put in millions updating the Walmart and the Target into having grocery components. There's also a Publix there. So 3 grocery stores. As you enter into the center on the left-hand side, there's a Tesla dealership. Every car you see there has money. With the new, there's 3 new studios that are going to be built in the area, bringing in millions more. So this is the location. You see some of the, you see the Publix, you see a few other options. That entire area, that square, that represents, it's so long and so big. It has its own police station and fire station smack in the middle of the center. The center is 106 acres. It is in between 2 large, very busy highways. So it's a land play. That's what this is. It's an interest-only land play. Why interest only? Because we had lenders courting us to give them. I think JP Morgan Chase and Starwood are fighting it out. They've decided possibly, hopefully, they're gonna team up together. It is as low risk mitigated as you can get. So GLA square feet, 1.06 mil, has 106 acres. Very busy. We can do the car count. We see how long that they're there. The 2 highways it's in between takes up this whole space. The net price was started 136. We got them down to 124. We've actually bid them down a little bit lower than that. Vacancy is 5.34%. So we have a little bit of upside. The guy who used to rent it, Sam Kruger, in that market had gotten it way higher than having this 5% vacancy rate. So we are bringing him back in to rep it again, since he knew everybody there and had a better success rate than the people who are currently managing it and selling it. So the first mortgage is going to be about 94 mil. We're gonna, and this is as of about a month, about 2 months ago, we did the CRI when we started looking at it. I think this is end of October. So the total debt service is going to be about 6.7. It's interest only. The cash flow after the D&S and TILC, the debt service TILC, is 3.9. Estimated closing costs of the 2, 13 upfront and RR and TILCs. The approximate cash required to purchase this is 46 million. So how did I get this? The 406 divided by 100, every percent equals 460,000. We're selling it in 0.5% and 1/4% shares. The annual cash on cash is 3.96. Basically, this is going to equate to, forget the 8.6 at the bottom. As I said, we've renegotiated a little bit because of the interest rates recently. Although yesterday was pretty good. I'm glad it didn't go up. So we actually are about a 9.2. We need 37% cash in. So this will generate about 39,000 a year for each 1%. So starts at, basically, we have 10.7 million NOI per year, ends up going to 15 plus million NOI at the end of the hold. We are going to be, I go through this. Okay, here's the 10-year cash flow projection. For 24 all the way through 2033, there's a 10-year hold, interest only, commercial mortgage-backed security loan through Starwood Mortgage. And now possibly JP Morgan Chase will take some as well. So as you can see, the percent growth is going to be significant. One thing that is not accounted for on here is that in the last 3 to 4 years, the land value has gone through the roof. Trilith Studios was built. It is the largest movie studios in North America. It's where they make all the Marvel movies and adventure movies. It has done so well that 3 other studios are now slotted to be built, and then within a 5-mile radius within the next 2 years. The average house, 3-bedroom, 2-bath, 2-car garage, has gone up over $100,000 in sales price in the last 2 years. It's doing well. So this is basically what the pie is going to look like. Typically, we have 5 major components to every single product we do. We've got the money that we make on the back end. You've got distributions through the life of the loan. Typically is about 1/3 of the money you're going to make, all cash depreciable. So when we say that 9.2%, that is after taxes. After your tax burden, you're making that 9.2% that first year, but you're going up to 15.7 at the end of it. Then you've got your escrow sitting with the lender. Then you've got your cash sitting with the property, that 2.5 that I've parked at BNY Mellon. Then you've got your price appreciation. As I said, this is a land play of 106 acres in between two massive highways. So what we're going to see is this price appreciation plus all the other components, estimated total return of about 140 mil. Over the 46 mil cash we put down, 305%. Projected 10-year IRR is 15.3%. Now you might ask, 305%, is that a lot? No, our multiplier has always been between 2.98 and 3.17% in 28 years on 30 projects. We always do about a 3. Okay, so these are just some of the deal points, again, going over what I just talked about. This is the AppFolio offering link. I will get from the chat, I'll get all of your emails and addresses and phone numbers. We'll send that to you in addition to this entire recorded presentation. These are just a few of the tenants, 26 total, plus the 3. A little bit more about the property itself. We'll send you the entire OM. Again, this is the property itself. As you can see, well laid out, beautiful location, stunning all around it, in between two major highways, apologies. And it is poised to do phenomenally well, which is why so many different lenders competed for it, all interest only, because they know and they have proof there ain't much risk here. Okay. These just go through the different base rents, how much, basically showing you the risk mitigation amongst no particular tenant having the vast majority. So typically we start a little earlier. We've gotten most of it sold. There is some left. That's why we're tying it to the database. Typically we do 1%, 0.5%, 1/4%, but in this situation, and you'll have all this info, in this situation, I'm going to go back to, you'll see it in your AppFolio encrypted account. Okay. Okay, let me stop sharing. You can see all y'all again. Okay, so the reason why we're tying this is because we believe in 2 things here at Five Rivers. We believe in long-term generational wealth growth, which is our retail shopping centers. We tend to do a couple of those per year. We do some small, we do a couple large ones per year. This is the one we've got going right now through Nuveen, repping the Teachers Fund. When we do this, we'll do others with them and take down some other bigger product. We are tying the data centers to this because we have so much outpouring of people who want that 50+% return in 3 to 6 months. Who doesn't want a piece of that? Because of that, we're tying it to 1/8 or 1/16 of a single % in the data center. For every 1 share you buy the data center, you will tie it to 1/8 of a % of the shopping center. So not much at all. If you buy a 1/2 share of the data center, we're tying it to 1/16 of a %. We've got a few left to fill. That's how we're going to fill it. So, okay, we've got some questions for anybody who's here. One of the reasons why I have Mr. Christopher Dykstra here, who is our new COO, is he has a great deal of experience with large retail shopping centers. He himself comes from the institutional realm. He has done from small, like 14 years old, doing the family business. We just had him come and join us. So maybe you tell them a little bit about yourself so that in connection to the retail shopping center, they'll have an idea.
Sure. Yeah, Chris Dykstra, started Monday, so first week, but grew up as she said, working with a family business on the residential side, moved into commercial about 25, almost 25 years ago. And have worked for all of the names that you might think of on the commercial side on the outdoor mall. Not with enclosed malls as much, but Regency centers, DDR, which is now Site Centers, Inventrust, Shopcore, and have really been in operations for most of my career. Have worked with malls, although not for mall companies, and I've also worked with centers that are very similar to the one she just showed you. I had a shopping center in Tucson, Arizona that was 1 million square feet. So very similar in size and scale to this. Had a lot of the same tenants, the movie theater and, all the Home Depot and all those similar tenants. And this is basically what I've been doing for the last 20 plus years is working for these larger companies. Shopcore, for those that don't know, was my last role. They are owned by Blackstone, and that's a name I think most people are probably familiar with. So
Yeah, and so as we transition into the last few products we've bought have been lifestyle centers or very large centers. So as we transition into mostly doing that level, $100 million, $150 million deals, we want to have that level of personnel taking care of your needs in every way. So I'm going to now, can you share who's developing it? Fidelis, I think this has to do with the data center.
I think they're referring to the HEB.
Okay,
Oh,
okay. No, that would be Reed King. So I was hanging out with Reed, so not Jeff Reed, but Ewing King and his son, who is basically COO, and then the CEO as well at the Reed King offices yesterday. They're actually developing it. Okay, any other questions? I know this has gone on quite a long time. We appreciate your patience in this. We've got, 7 of y'all? So what other questions do y'all have?
What is the dollar value of each share for the data center?
Still? And Cameron, are you there? Okay. What are the
I'm still here.
blocks or shares for the data center? So 1% of the data center, this particular data center, 554 Club Drive, we're in the process of trying to get the other 2. We're going to try to bundle them together. What we're looking at and what the prospectus on right now for this smaller section is 11 mil. We divide that by 100. 1% equals 110,000. 0.5% equals 55,000. Any other questions? Y'all are all muted. If you want to unmute yourself. Let's see. What's the next?
Something about the money.
Okay.
Maybe they're trying.
See, that's us.
Yeah, if anybody's talking, we're not hearing.
Yeah, we're not hearing you. Can you unmute your Zul is you're unmuted. Go ahead.
It's an audio issue right now.
Just to
Something that
clarify-
does that make sense here?
Just to clarify, 1 share of the data center is tied to 1/8 share of the
Okay, can
shopping.
y'all hear us now?
Yeah.
Yes, we can hear you.
Okay, we can't hear you for some reason. Okay, type in your. Yeah, go ahead and type in your questions and we will get to them like that. We heard you guys just a minute ago. That's so weird. Okay.
Yeah, for the moment, if y'all want,
Go to the chat section. It's second from on the top of the screen. It's second from those buttons on the left, and then type in your question.
there was another one from.
Okay, Cameron, what is the ratio for the data center to the shopping center? For every 1% of the data center, which is 110,000, we're asking that you buy 1/8 of a single percent of the shopping center. So the shopping center is 460 for 1%, 230 for 0.5%, 115 for 1/4%, 57,500 for 1/8%. If you're buying 0.5% to the data center, which is 55, your half of your 1/16 of the shopping center would be 28,750. Okay, so off the top of my head, I think that's right. Okay, okay, so that's what it is, and that the data center is you're out in 3 to 6 months, about 54% return on equity. In the shopping center, it's an interest only, tax deferred monthly payout, where it is going to be 9.2 up to about 15.7%. Okay, the reason why I brought how popular that land in that area is, Fayetteville itself, because of the studios, is because, and the price of the house is rising. Those big box tenants, 26 of them, the way that they work is when you enter, you start a lease, it's typically a 10-year lease for a retail space. Then you have 5-year options. You typically do 2 to 3 5-year options. That puts you out at about 25 years. As they built this center in 4 different sections, they started about 25 years ago, and then they built another, and another. All of these are going to slowly be rolling over. They've all kept the first, took their first, second, third options. Their sales are phenomenal in this region. They're not going anywhere. Now that in the last 2 to 3 years, this price of the dirt itself has risen so much, we know that we're currently at about 65% of market value for that dirt. So as we write those new leases, we can write them for a higher dollar per square foot. That is not even in the modeling right there. So we will be able to value add that because we have the opportunity to now do that because the area is taking off. So when I say that 10.7 to 15 something million NOI per year, that ain't including going up to market rate for the dirt. So, okay, that's what that is and how that works. Okay. Can you explain how the exit will be achieved for the data center in 6 months? Once the data center is fully leased, will the entire property be sold? No, think of this as a very well-paid bridge loan. We already have the tenant in hand. You want to tell them a little bit? You told them a little bit about the tenant. So we have the tenant in hand. He's waiting for us to close this deal. I've got to buy this. I've talked to the bankers themselves, sat down in a room with them, all of them, plus the principal party, Jimmy, who owns it. They've all committed to me that they're ready to move forward with me. I need to buy the sections of the data center to get the note from the bank before the bank forecloses. In order to get that note, I'm doing an equity raise. Once we get that, we've got the tenant in hand. We then go to a lender and say, hey, based upon this actual lease term for 10 years, what can you do to capitalize? We get the capitalization, we cash you guys out. That way you're in, you're out. We know what those numbers are going to be because we know what the lease we're going to write at. We know what the value of the land is. So that's why we're pretty sure about what the rate of equity return is going to be for our LP partners. You guys are cashed out, free to go on your way. Now, it is a short-term capital gain because it is 3 to 6 months. So you're going to pay some taxes on that, either 12%, 22%, depending upon your personal situation. So just be aware, plus the 3.8% on top of that, that the government imposes. So just be aware, it's a short-term capital gain. So there are some taxes involved, whereas the long-term shopping center, you can be depreciated out of all that. Okay, how many shares are available for the data center? We still have a fair number of shares that are available, but I'm linking because of the linkage. We have some available. There's been a lot. We've sold most of the shopping center. We decided to link a tiny portion of the shopping center. We have space available in the data center. Zul brought Summit to us. we are open to seeing how much you would like of it. If we, and I'm hoping I'm successful in the next few days, to get the other portion of the data center, what we would like to do is put that family of data center back together. It deserves to be one again. That's how it was actually built out. I'm pretty sure I'm going to be able to set that up in the next couple of days. When we do that, we will have a humongous pot from which to purchase. And I will come to you guys with all of those numbers then. But we have a fair number to buy in right now. We just started this process. Okay, how many shares are built? Okay, any other questions? And please, apologies, I'm not sure why the speaker's not working. It was earlier. Just type in your questions and we'll answer them immediately. You guys think of any other recent? Okay,
Click on the more,
more, okay.
go to settings.
By settings.
Yeah,
Mhm.
and speaker.
Can you guys say something now? My microphone's working.
Can you hear us?
Oh, hold on, you were there, hold on. Okay, say something again?
Can you hear us?
Yes, yay! Okay, thank goodness.
Alright.
Awesome. Teamwork. We did it, okay.
Clear.
Yes, loud and clear. Thanks, Jeff. Okay, who's got a question for us? Now that we can actually hear y'all.
Can you hear me, Dr. Isha?
Yes, thanks, Zul. I can
So
hear you
Cam-
loud and clear.
So Cameron, question is, we are buying only one of the data center, which is 550 or 554?
554 is what that I have right now, but I just got in Tuesday evening, I was in the room with all three of them. I talked to all of them, all three banks and those bankers again yesterday evening. I was busy with this and a couple of other things today. I have a meeting with the principal tonight on the phone. When she and I come to an agreement, those three banks have already said they're going to be in agreement with me. So I've got maybe 2 conversations left to have. I'm hoping to put this to bed where we can hopefully have all 550, 552, and 554 ready to go. I should know that in the next, hopefully by end of day tomorrow, if not by then, by Monday.
So with all these three combines, it will be more than $11 million anyways, right?
Yes, yes.
So what
That
is
will
it?
probably, that will be closer to the 30 million range. But right now, what I know I can get is the 554, which is the 11 million range. Think of it as like 1/3, and then the other one with the 33 acres attached to it. And the office building, that's the 2/3 size. So my goal is to put them back together, get all of it for us. Right now, the pricing is on 554 for 11 mil. God willing, I bring you the guys, the rest of it on Friday or Monday for the other larger portion as well.
When do you need to know our commitment by?
I apologize, Remen. What was the question?
When do you need to know our commitment? Like, what's the deadline, sort of?
So I would think I'm going to try to purchase either this portion or all of it by the end of the year. I think that's our goal. I think the banks want in. But when I asked Veritex, what their timeline was Tuesday night, and he actually said the word urgent. I think that means he wants out by the end of the year. Yes, he did say urgent, didn't he? And then NBA's trying to walk it back, and I was like, dude, he just gave you a.
We're not that desperate.
And I think that they need to do that for reporting and tax purposes. So my goal is to negotiate as damn good a deal as I can get for us and then move on it as fast as we can. Any other questions? So when we send you the presentation, the recorded presentation, I will send you the prospectus. I will send you all the information that we have on everything, all aspects of both properties. I will give you an update as to what I find out from Jimmy tonight. And then I'll talk to the bankers again tomorrow. Worst case scenario, we have to wait. Knowing them, they might even call Saturday. Keith was really cool about it.
They work.
They are that he works Saturday. He gave me his cell phone number, so I was like, they're motivated. So I'm hoping that by Monday I'll have updated numbers and numbers on the entire portfolio for that 550, 552, and 554. If you guys, because of my relationship with Zul, if you guys Summit are interested, y'all have first dibs. Let me know, okay? Because I'd like to create a relationship with some professionals. And from what I've understood from a variety of people about your organization, y'all are. So we are motivated to work with you guys. I will get you all the information ASAP, and let's go from there. Any other questions or comments or anything you'd like to ask of anybody here?
No, I think that's all. Sounds good. Thank you for your time.
Thank
We
you.
appreciate it.
We appreciate it, Jeff. We appreciate it, Remen and Zul. Thank you so much for setting this up for us.
Thank you, Dr.
Thank you.
Ishmael, for bringing a whole team, your team in very short notice. It's good to know you.
Well, thank you. We believe in giving white glove service. So this is just an indication of who we are and how we treat our family of investors.
I would like to hear some comments from Dr. Hardam Azad,
Ah, okay, Dad. What would you like to say? He wants to hear something from you. He's suffering from a cold. That's why he has the mask on.
Yeah,
Okay.
but it's all about adding value. You add value, whether it's data center or the other one is a deal structure. You don't make money when you sell something, you make money when you buy it. So a couple of things that I have learned over the many years that you can see in my looks, 80 plus, is that you really, if you know how to add value, you assemble a team of people who know what the hell they're doing. They have connections. And with that, and then the determination and thinking failure is never an option. That she's like a, what they call that, bunny that.
No chance are funny. Yeah, levels.
So.
Did you say that's fair?
That's true. It's a true statement.
So if it doesn't work on a Friday, it'll work on a Monday. Because we're not going away.
Well, I ain't even waiting. I'm going Saturday.
Why wait for Monday?
I can
So I think
Yeah, you can too. You too.
we have, as a result of our mission to add value, I personally have earned all the money I need for the rest of my life. I don't need the money. I get high on making you money. Because art of the deal is part of it. And so now I'm getting excited about something. Now they're saying, like was it Kmart that used to have a red light special?
Blue
light special. Well, the data center is like blue light special, whereas the other investment is for 10 years, long term. And our long-term track record was shared that was 31% total return, which is almost like 45% after tax return.
Yearly return.
Per year, year after year after year, that was over 12 years. All those properties from bad to worse. So my son, Dr. Paul, he told me, he said, Dad, your track record is better than the guy in Iowa.
Berkshire Hathaway, yeah.
Berkshire Hathaway, he said that they didn't 31% over the last 25 years. So and that's money to me. That we can, so it is through you, as Shinala pointed out, I want to underscore. Without you, we can't make the deals. And without us, you can't enjoy the returns on a long-term basis. So it's a symbiotic relationship, investors and the folks that are knowledge-based, who we need to have tenants, okay? You're gonna find tenants. There's got to have technical base for data centers. Here's a guy who knows something about that stuff. In the retail sector, we have been growing over the years. So Mr. Dykstra, he is institutional grade among, so we're upping our game. We had a staff meeting this morning, say, hey, we're now in the big leagues.
We're a little different than when you knew us way long ago, Zul.
Yeah.
We've grown a little bit.
I know, I
That
know.
was a long time of Collingwood shopping center in Louetta, and yeah, we have left those types of properties way behind. We, like Regency Center is where we sold that property to.
Okay.
And Regency Center, we worked for many years back.
But as we get bigger, we have more opportunities now, not just for the Class A lifestyle 1.1 million square foot shopping center. I mean, who knew we'd get an access to the biggest shopping center in an entire state? But that allows us to have the collective buying power to now bring in the equity, to now start a different division and start working with experts in the field like Matt and Todd to now do data centers.
Yeah.
And we'll grow from there. And I don't know what the future is going to be, because we'll then, as we get this under control and handled with the data center realm, then we'll be open to other ideas and other forms of deployment of cash. So we are on a journey of discovery of how to make money in a variety of arenas. And we would love for y'all to join us in that journey. So I think that's about it. So we thank you, gentlemen, for your time and your listening. And especially, we've taken up a little bit more, but we appreciate. And we really do hope, I'll get you those numbers updated as they come in within the next few days. And we really would hope that you come along on this journey with us. Thank you, Zul. Thank you, Raman. Thank you, Assad and Jeff and SK.
Thank you, Dash. Thank you.
Thank you.
Thank you,
Bye,
guys.
all. Thanks.
Thank you.